Hello, everyone. Happy to be back with another young person, part of the Voice of the Young series. Right now, we have with us Vineet. Let's listen to him. Over to you, Vineet.
So, first of all, good evening, sir. And first of all, I would like to thank you for having me here. And secondly, I would like to appreciate you for creating such sort of platform for providing the youth a platform at which they can express their own views or express their stories in their own customized manner, in their own personalized way, through which different people can listen and understand to like different learnings. So first of all, I would like to thank you, and thanks for having me here. So, for all the viewers, hello everyone. I am Vineet Kumar. I am currently a final year student pursuing BCom honors from Atma Sanatan Dharma College, University of Delhi, and I am born and brought up in Gurgaon. And I have keen interest in finance. So the most of our uh, video, most of the Vidped will be on the discussions related to finance only, because that's the thing which intrigues me the most, and I want everyone to hear about it also.
Okay, let's do it.
Sure. So let's start with it. So actually, as I said that I have keen interest in finance. So let's get take it back to my high school. So I have finance has played a major role since my high school. It has directly or indirectly impacted my choices, whether it be academically or non-academics too, in whether it be academically or non-academics in the related to finance. So basically, you say about choosing the commerce stream or taking BCom honors as my career and pursuing my career in the same. Like as of now, if I share with you my my plans for the sorry my plans for the upcoming years are basically to basically to sorry sir so
Okay,
basically
go ahead.
basically sure sir so basically to simultaneously pursue CFA, and along with that MBA in finance. So let's take it back through high school. Since the time I started developing that interest in finance, so actually the it goes to the days of 10th board exams, in which I used to prepare for my board exams, and simultaneously I used to see one of my uncle watching news all day and having something flashing on their screen and buying and selling. I didn't know about the system of equity markets back then and had no ideas about it, but I was really intrigued with it. So I used to to be really honest, I used to poke him that what are these things, what are that thing, what are these things. So he used to he used to tell me that first of all you should focus on your studies right now, and after the studies you can get into the markets, and there are a lot of options, career options, as well as if you don't pursue it on a career basis, it has a passive income source option too, which you can have as I said that it can be a passive income source.
Yeah.
So I said correct. So I said great. So basically, I I actually had an agreement with my mother that as soon as I clear my 10th board exams, I'll have my DMAT account, because actually I could not have my DMAT account, so I got my DMAT account on my mother's name. So I got my DMAT account within a week after the my exams got over, and coincidentally, within a couple of days, the first lockdown hit in 2020. The first lockdown hit as soon as I started trading or investing, whatever you say, because at that time I did not have any sort of knowledge, but what I had was that passion towards market, that uh, as I said, that curiosity, that how these things work, how companies get listed, how these stocks move. So all of that things fascinated me a lot. So to all those people those I share this story, what actually happens is they judge me as a COVID trader. COVID trader, as the term came from, that people were not doing anything and they were had a lot of time in the first lockdown period or the second lockdown period, and at that time they used to hit the markets and just do anything. So actually, I am not that sort of person, that I am
Mm.
not a COVID trader. I had decided it earlier only that I want to try it and I want to give it a hit so that I can like not have that regret that, oh no, I should have started earlier, as Warren Buffett says. So basically, this was my story. In 2020, I started trading, just doing the same things, taking tips from here, there, and all of that stuff. So for the next couple of years, I had a few losses, both in the equity segments, and the biggest mistake I would say I did was getting into the derivative segments, which was the high risk, high return part of the markets. So I got into that without any knowledge, and I burnt a lot of money. And all obviously it was not my money, it was my parents money. So I told them that this has happened, but I am confident enough because the thing was, in those days when I was practicing it, or I was either losing or winning, I saw that potential in the market, that it has the potential, although I am doing wrong, but someone else who is disciplined is creating that money which I am losing, because the derivatives is the zero sum game. So so that potential actually gave me that confidence that now I have not learned enough, and I just need to practice more. And so I just gave it a pause because my 12th board exams approached, because it took 2 years to lose that money. And in the 12th board exams, I gave it a pause. I took a 6 month break from markets to focus on my studies. And after my board exams, I first bought the courses. I used to watch random videos on YouTube. I used to read random books on technical aspects, fundamental viewpoints, and all of that stuff. So eventually, what happened was, I used to realize that I am currently taking knowledge from 10 source points. For example, reading books, having a course, this or that, or all of that stuff. But only 2 or 3 points are working. If I watch 10 videos from YouTube, only 2 to 3 points are there which are actually working, which are actually practically which I am able to apply and get the profits generated from the market. So what happened to me was, I found a YouTube channel in which he used to upload a video weekly or monthly, and I started following him. And what actually happened was, whenever I used to see his video, I used to get a better understanding of the market, and whenever I used to apply that thing, i I actually became more and more profitable. So I finalized it that my board exams are now over, and it has been 2 months of my break, because after the board exams it was my CUET exams. It was the first time that entrance exams were happening in University of Delhi.
Yeah.
So what happened was, I gave my CUET exams, and I had a good 2 to 3 month break, in which the results were not out yet, and the college were like 3 months far away from me. So I gave that 3 months dedicated to get that course done, to practice hard. And eventually what happened was that in the last financial year 2023-24, I I touch wood, I recovered all the losses and had some profits also, and came to the break even point including the interest. So basically, I from this story, I just want the people, I would just want especially the teenagers, to focus on one thing, that although these markets fascinates you a lot, but you should actually first focus on building your active source of income and enhancing it more and more, adding skills to it so that you can enhance the active source of income, rather than getting fascinated by the influencers and like getting that lifestyle influencer mindset. that I'll buy this car, I'll buy this within 2 years of span, within 5 years of span. So actually, success is a long term game. It's not that you get that overnight success. That is what I learned from it. And few key points I want to share it. All those people who are trying in the markets, or especially as I said, the teenagers who are actually um, trying in the markets, I want to just recommend a few points. Don't set the unrealistic returns expectations. Have a big capital base. If you don't have a big capital base, as I said, work on your active income source, get a big capital base, and then enter in the markets. Because if you have a return of 10% on 1000 rupees and 10% on 1 cr, so on notional basis it has a lot of difference, but on the percentage basis it is the same. So that's the difference, because people think that they'll put 10,000 bucks and they'll 10x their money. So that's the wrong way to approach. Earlier I used to see the think the same, but as soon as I hit the realizations, the things changed. So that was my journey related to it. Now coming back to my academic uh, approach, what I did. So after my 10th, I went for commerce with maths, as I said, because along with it, I was having my interest in equity and stock markets. So I wanted a stream that could support my interests. So that's why I did not choose either science or arts or any sort of things. And after 12th, so the biggest thing, so the biggest breakthrough for a person who is opting for arts, not for arts but especially for commerce, is getting
Yeah.
into University of Delhi, getting in a good college of University of Delhi. And at that time, the new entrance test came, CUET. So that was another new experience, because there was a lot of yes and no, that whether the it will happen or not, whether it will be only based on metrics, or it will be CUET plus metrics. It will have different weightage. So that was also another great experience. And after CUET, I got into my college, and college has taught me a lot of things. I would really say that college has given me that exposure. It has helped me transform my personality, because the exposure you get after getting into the college, the new experiences you get, the whenever you meet new peoples, you get to know their story. So, as I'm telling you my story, there are a lot of videos in which they have their own background and they have their own story. So these all things actually are the interesting part of the life, which actually develops your personality. So my college gave me a lot of exposure,
Hmm.
a lot of alumni, a lot of super seniors helped me in choosing that whether I should go for as in my career options, whether I should pursue post graduation, work X, and all of that stuff. So in guidance matters, so whenever the field of guidance came in, I got it. I got the help from the seniors. Whenever I used to see my classmates doing different things, it actually empowered me more. And actually, what happens is, in college, what people do is they actually take competition in a very different manner, in a very negative way. But according to me, a healthy competition is very much required.
Hmm.
uh, a healthy competition is very much required. So the difference between a big college and a normal college is simple these two things. First of all, the placements. Obviously, if you have a brand value, you will have a good placement. But the second thing is the peer you have. If I go to a normal college, or if I go to a X college or a Y college, I would not like to name any other college. But if I go to an X college, which does not have a good brand value, and a Y college which has a good reputation, so that Y college has that peers, that ecosystem, which helps you to boost yourself and get 110% out of it.
Okay.
So in these manners, that thing helps.
Okay. All right. Let's continue. You're
Sure.
telling us very interesting things. Let's listen.
Sure. So, as I said, I joined. So in the first year, I joined a lot of societies, whether it be the finance society, whether it be our departmental society, and all of that stuff, and worked a lot in it. Understood the hierarchy, understood the organization structure. Because what actually happens is when you see the things from outside, it seems more difficult. If you see, if I am a 12th pass student and I am seeing a corporate person going in office and doing a lot of stuffs, I find it so difficult to understand that what all technical aspects are there in the job. But as soon as you get in the system, as soon as you get the mock drill of the corporates in your societies, by following that organizational structure, by performing those tasks, by heading those events, by organizing all of that stuff, it actually brings in the real side that okay, it is not impossible, you can do it, just take it step by step, one step at a time, so you can do it. So first of all, I learned that from the societies. Next, I used to go to a lot of case competitions, whether it be related to business plans, mock stocks, because actually the stock market never left me, and I too never left the stock
Ah,
markets. So I used to go in different competitions every time. I built a group in the college for all the people who are actually an aspiring traders. So we used to interact with each other, that what happened, and all keeping all the global financial news in intact. And other than that, after my first year actually I did a lot of fun. I did not focus on my academics, but I did a lot of fun because I just wanted that exposure, that being from a that transforming from a student to a college boy, from being a school student to a college student, what things change, what changes in personality are needed. Because I think academics is important, but if you just be in the academics and don't have your personality developed, or for let's say if I and you are interacting, or I am interacting with any other person, and I don't have that curiosity, I don't have that communication skills, I don't have that eagerness to listen to him or to understand him. So that that things actually come from experience, which is the exposure, as I said, which I got in the college. So as I completed my first year, then I moved in the second year. I took my academics a bit more seriously, and due to COVID only, I our course of 3 years has been shortened to 2.5 years, I would say. So the initial 6 months. So actually, what happened was, uh, on a general note, what happens is in the University of Delhi, the new session begins in July and August, like in the late July. But what actually happened for our session was it began in the October month. So those months in which were left because of all the stuff, because of COVID, because of CUET happening first time, and all of that stuff, uh, that 4 to 6 months that I missed actually has provided me with a shorter span of time in college. So there is less time, and you want to do it more. Anytime you have to, every time this is the scenario. So college has actually given me a lot of exposure, and given me that
hmm.
increase in that confidence level. Actually, I would say.
All right. So is your future mainly in passive income, or this stock market and derivatives is going to be your active income? Or what's the ratio?
Okay, so interesting question. I would like to uh, actually recommend to the people who are interested in the markets, or whether it be in, like, I would say that the people who are interested in their passion projects now, they should focus on that, but not leave their backup options. Because all the big peoples who have taken risk, they tell that you should take a risk, you should take risk, but they don't tell that they have also taken the calculated risk. They have not got that key. I am putting all in, and I will either double down or I'll get zero from it. So this is the thing that you should realize, that whether it be your passion projects, whether it was my interest towards the markets, or as you said that whether I'll focus on the markets as an active source of income or passive source of income. Until the realization hit, I used to think that it can be my active source of income, but I would say that never treat your investments as your active source of income because actually that is your retirement plan, not your plan at this point of time.
You mean to say you are thinking of retiring at this age?
Not at all, not at all.
What's your retirement plan? I mean, come on, you're young. You haven't even finished college. You're talking retirement plan?
No, 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 no. I am saying that until I realized that the active source of that your equity markets cannot be your active source of income. I used to think that I can do equity, I can trade in markets all day and
Uh,
I'll earn this, I'll earn that, just because of the influence. And at that point of time, I used to like think these things. But as soon as I have realized that what are the realistic returns, and what are if I calculate all of the things which I have right now,
hmm.
so it's not that way.
No, but it's very interesting because when people, young people get a job and they will have the first job, and sometimes they ask me that, what should I do? As my advice is always save for your retirement now. Save it now. They say, what? I am only so young and why can't I enjoy? I said, go ahead. This is the only time you can enjoy without money. You can still enjoy without money. In college, you enjoyed without money. Now you can still enjoy without money. Please put as much as possible in your retirement plan, because please understand the compound interest, and you will be grateful when you are 60 to your 24-year-old young self that, look, I put away X money at that time. And it's because once you hit 40, it's very tough to save. There's a lot of responsibilities that come. And some people have taken my advice. They say, all right, I am going to put as much as I can in my, whether it is an aggressive equity fund or something else, I will just put it now. I say, yeah, don't even think that you're making so much money. Think you are making 20% less. It's good enough.
Exactly,
It's good enough.
exactly.
Put it now. So I'm just not laughing at you. I'm saying I'm laughing with you that we should, first job, when you start making the big money after your college, put away as much as you can into a savings plan for your retirement. And later on, you may
Definitely,
even be able to borrow against it. Don't take it out. Don't take it.
definitely,
Leave it there.
definitely.
Maybe you can use that as collateral and borrow against it, and that's okay, because then you'll put it back there. All right, let me stop talking. Let's listen to you.
So I 100% agree with you that actually the sacrifices you make today provides you the freedom tomorrow. So
Yes.
that's the biggest investment thesis I have.
Yeah.
So to any person who is right now working, I just ask a few checkpoints with him, that do you have an emergency fund of 6 months or 12 months? Do you have an health insurance? Do you have a term insurance? Do you have an active investment plan, that whether you'll have that discipline to save 50% or 30% of income? Let's say you decide 30% of your income, but don't get that point to ki bhai ki let's say take it to 20% this month because I have to purchase a new iPhone, or I have to live a new sort of lifestyle. So if you get to a number, just stick to that number, because
Yeah.
it actually brings that discipline in you.
Yes. Okay. Good. We agree. All right.
Sure.
Let's continue.
Sure. So another point I would like to add, I forgot to mention it, was that the requirement of financial literacy right now. Like when I was not financially literate, I was just hovering around and use. to listen that say more on more, say more on more, and those sort of phrases. So I just took it in a lightly way. But as I understood the compounding effect, as you said, and as soon as I uh, understood that how important is to invest early and all of the different aspects of investing, so from that point of time, actually I saw the world from a different point of view. Now if you take the facts, if you take the facts, 4% is the insurance penetration in India, with a global average of 6.8%. And global average, I'm saying 6.8%, which includes the underdeveloped nations too. And India being one of the front runners in the GDP and the economy related things, it should be in the upper range of it, but it is below the average. It is 4% of our total population has an insurance, whether it be term insurance, life insurance, health insurance, any of that. 5 to 6% of our population is investing in markets, whether it be through mutual funds or direct stock investment. So that actually hits me a lot of time, that people are people are taking it in very lightly way. And why I'm saying this is because uh, the scenario in our country 20 years back and right now is very different, very very different. At this point of time, country is seeing our country is having that vision to go from developing to developed. And in this point of time, what I have actually seen in my studies from across the world, whether it be US, UK, and all the developed nations right now, what actually happens at these point of times are two things: a higher amount of taxation, because government needs a lot of money to spend so that they can take their country from developing to developed, whether it be defense and any sector. And the second thing what happens is the second thing what happens is the income inequality increases. Why does the income inequality increases? Because of the inflation. So taxation and inflation are the biggest two factors at this point. Taxation is increasing. Recently in the budget too, the short-term capital gains and the long-term capital gains have been increased, and these will keep on continue. These will keep on increasing in the future. Similarly, the inflation will keep on increasing because, as I said, the India is looking for to become a developed economy by 2047. So it cannot happen that our the normal general prices remain the same. There will be a mass inflation too, which was not 20 years back. 20 years back, what happened was, if you had invested in fixed deposits, you used to preserve your money because the interest rate of fixed deposits was 8% and the inflation was 6 to 7%. Right now, the scenario is opposite. The FDs are giving the return of 6%, and right now the segmental inflation for all the viewers, I would like to brief it down, is the inflation in particular sectors, whether it will be in health sector or education sector, the biggest sectors in which the inflation is growing at a rapid pace. So the segmental inflation in education and health is near to 12%. So that is just burning your money. So that is why, as you said, that investing is very much necessary. I 100% agree with you. And another thing which I have seen is, I have interacted with a lot of people in this industry, and as well as with a lot of people to understand their financial planning. Actually, what I do is, I go to a person. If I interact with a person, I just understand that what is his mindset towards money and what is another person's mindset toward money. A person who seems to be rich, what has he taken, what the steps he has taken, and the person who seems to be poor at that this point of time, what steps has he taken. So the difference is made. And a lot of times I have seen in India, the people who seems rich have all the net worth in their house only. Their real estate actually accounts for 80% of their net worth, and in that real estate they are staying. So that does not account for as an investment for them. Similarly, a person who seems to be poor has a lot of investments, whether it be in real estate, gold, because these two are the biggest asset class, the most favorable ones for the Indian. So for these people, they are living in a lower standards, but they have an investments equal to the person who is having a
Yeah.
good lifestyle.
Yeah.
So I have seen such instances
Mm-hmm.
that a person with 20 cr of net worth is living in a home which is 10 cr including his net worth, and a person who has 35 cr of net worth is living in a home of 2 cr. I have seen actually seen such instances, and this is the point where the financial literacy point of view comes in, that people don't understand. Let me share an instance with you. One of my house help took a loan from a private lender at the interest rate of 16%, and she did not understand, and she did not understood any of that point. And what happened was, she told me that I have taken a loan of 4 lakhs, sum of money 4 lakhs, and it will be repaid in the next 4 years with this amount of emis. And when I calculated it, it was close to 16%. so I immediately turned to her and told her that if you take it from the bank, the personal loan interest rate is also 11-12%, and you are taking from a private lender at 16%. So seeing such sort of instances, I just have that emotion in myself, or the thought in myself, that everyone needs to be financially literate from the elementary education point of view.
Mm-hmm.
So as soon as they get into their elementary education, high school, they should understand the basics of finance. That's the biggest thing,
Okay. It's most people cannot understand finance.
actually.
There's because they have been not taught in college or high school. After
Mm.
that, it's very tough. Okay, but anyway, that's a well-known problem. Anything else you want to add here?
No, nothing. I just wanted to emphasize on this thing only, that
Okay.
as your Vidped suggests, the voice of the youth.
Yes.
So this is my standpoint, that everyone should be financially literate.
Okay.
Everyone should have the basics things done. Right.
I could agree with you more. I agree 100% that it's not in high school, at least in college, it must come because
Sure.
without it, in today's modern economy, you are going to be a loser. Okay, you're going to be. All right, good. So let's end it here, shall we, Vinny? Okay,
Sure,
all
sir.
right, good.
Sure.
So I'll be back with another young person or an expert soon. Till then, bye, everybody.